Michael Saylor was just on CNBC sharing his thoughts with the recent price action on why Bitcoin is pumping, sharing his thoughts regarding the ETFs, as well as predictions and catalysts that will take us to $1 million above and beyond. So here's the latest. I recently just transcribed this myself. There's an article headline here. Microstrategy's Michael Saylor calls Bitcoin an institutional grade asset destined for $1 million per coin. Here's the interview I actually shared earlier on X. It's maybe only 4 minutes, so it's short and sweet, and I transcribed it, and I'm going to read you what he shared word for word. Here you go. Michael Saylor says, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions. Preach. We welcome fair value accounting. It's going to create much more transparency and clarity and P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now, they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies. We're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents the digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we are 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they are moving from 0.1 to 2%. And I think that's really driving the trend. Now listen up. He says, I have said before, if Bitcoin's not going to zero, it's going to $1 million per coin. The real question is it a legitimate asset? If it is a legitimate institutional asset, everybody is under allocated to it. Let that sink in, family. Get more sats while you still can. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. You know, loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think the smart money is investing into that ahead of it. People focus upon mining pools, but the actual mining is taking place in Bhutan and in Argentina and in South America and Texas and Europe and Iceland and Africa, everywhere in the world. And so the miners themselves are very decentralized. They'll remain decentralized because they're chasing after power that's effectively marginally free, and the pools that they will accumulate hash rate from time to time, but they don't really have the power. The power is sitting next to a geothermal or hydroelectric project somewhere in the world. So there you have it. Let me know if you agree or disagree with the sentiment here from the Giga Chad, and that we're more likely to go to $1 million per coin versus going to zero. Now, there's more. Here's some more predictions from Michael Saylor. Yeah, I think Bitcoin keeps going up forever. I mean, there is no reason we couldn't go to 10 million per coin because digital property is in the highest form, right? It's going up forever, Laura. He also says he shared 3 catalysts which can take Bitcoin to 5 million per coin, which I believe I shared back in September. It was number 1, the spot ETF approval, which we know is inevitable. Number 2, banks custody and lend against Bitcoin as collateral, which we all know is coming soon after we get this ETF. And number 3, fair value accounting rules from FASB, which was approved, and it officially begins in December of 2024. So these predictions from Saylor are already coming true. So $5 million per coin, send it, and let's get it. He also shared when he was on the podcast with Patrick Bet-David, he shared Bitcoin's on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. Amen. He also shared Bitcoin is about to 425x. Here's why. Because Bitcoin is just pure money. It's just as effective at 100,000 a coin as it is 10,000 a coin. And at $1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at 10 million a coin than 1 million or 100,000 a coin. It's kind of a universally scalable asset that gets less risky. The only thing that's going to change, in my opinion, is when it was super risky and scary below 10,000, you were getting 100 to 200% a year annualized gains. And when it got a bit more understandable between 10,000 and 100,000, your gains go to 40 or 50% per year. And then at some point, they go to 30%, 20%. And in the extreme, if everybody in the world understood Bitcoin, it would be 20, 30, 40% of the wealth in the world. So it would be $200 to $300 trillion in today's dollars. That's basically 425x from the current market cap of BTC. And then the price would be appreciating at the rate of global inflation and fiat currency. So if the gold inflation rate remains at a 7, and it would still remain at a 7, and then it would appreciate a little bit more because of the productivity of the people that adopt it as a treasury reserve asset. But wait, there's more. Another prediction he shares, talking about BlackRock, Citadel, and Fidelity sending the Bitcoin price to $1 million per coin. Quoting him here, it looks like a spot ETF will probably get approved. There is massive political pressure to approve one. That's right, Mr. Gensler, no hair Gare. The circumstances have changed, and now there is a way for the SEC to approve it without backtracking on its previous legal and policy guidance. Certainly, there are a lot of Wall Street entities that have a vested interest in seeing this happen. If you're an institution, one way to get Bitcoin exposure is to buy the underlying asset, but there have been challenges with finding the right exchange to buy it on and the custody arrangement. So a simpler way to do so is to simply buy the spot Bitcoin ETF. There are trillions of dollars in capital that is required to invest in a security that trades in these compliant forums, and that is understating the obvious. There's tens of trillions of dollars. There's a lot of capital that can't buy the Bitcoin or self-custody the Bitcoin. They don't want to do the charter. Maybe it's against the tax code. Maybe when they raised $10 billion from public investors, they raised it to invest in securities, but not interested in property or commodities. So the spot ETF availability is a major milestone for the institutional adoption. The approval of a spot ETF is a major milestone in regulatory clarity, which is tantamount to an endorsement. The engagement of Fidelity, Citadel, BlackRock, Schwab. I mean, Schwab is synonymous with Wall Street, 100 years of Wall Street. So what you have here is Wall Street coming together to offer securities and exchange services and indirectly custody services for mainstream investors. And if we look at about 12 months, and if I was saying, what are the key milestones that drive mainstream adoption of Bitcoin? Well, one of them clearly is the spot ETF. The second is the designation that Bitcoin is an asset class, the recognition of it as a legitimate commodity. It's a big deal. When Jerome Powell says it's not going away, when Gensler and the head of the SEC and CFTC both say it's a digital commodity. Digital commodity might not sound like much, but when you go down the next round, like, is it a Ponzi scheme? Is it a scam? Is it tulip bulbs? The difference between tulip bulbs and a digital commodity is a 0 versus a 1. I've said it before and I'll repeat it again. If it's not going to 0, it's going to $1 million per coin. It's either nothing, and if it's nothing, then it's getting scrubbed out and banned. And of course, we know it's not getting banned. There is no way Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this. They're not endorsing a tulip bulb, right? Once you go from 0 to 1, then the question becomes, well, it's an asset class. And if it's not going away, well, what's it worth? Well, it's worth 1% of the assets in the world. So 1% drives it up by a factor of 10 to 20. So there you have it, my crypto fam. And if we were to 10x from today's price action, we're talking about $420,000 per coin. If we were to 20x, we're talking $840,000 per coin, ultimately right on the cusp of $1 million. So let me know your thoughts and let me know if you agree or disagree with the Giga Chat.